Hi, this is Zam here with a weekend edition of the Bulletin Board Heroes here at Zach's Traders Cafe for Sunday, the 14th of January. Starting off with the FTSE 100, which has bounced off a rising 200-day line. That's around 75.65. We didn't really want to see this market hit that line, but it did at the end of the week. And there's still the risk of hitting the floor of that rising trend channel from the end of October, and the 50-day moving average at 75.45. And given the way that in the recent past most of the negatives have panned out, we need to be wary of that. On the upside, a break of 76.80 is what's required to give us a move to 78.20 and the top of that channel. Obviously the FTSE rather underperforming other international markets, but that's what it's there for. Moving on to the DAX, and here a consolidation between the old July resistance around 16,500 and December peak at 17,000. Want to see an end of day close outside that range to give us the next leg, hopefully to the upside. In this case, we've had two bounces off RSI 50, which is normally enough. At least one is enough to give us a new move to the upside. Break of 17,000 gives us 18,000, and that January 2023 resistance line projection on the downside, possibly down to 16,100, which was the old August-September resistance zone. Moving on to the Dow, where the miracle in the recent past has been that we're remaining within this very sharply rising trend channel from October. The floor of that channel currently around 37,500, and we're staying above that. I would assume that at some point we will actually break down and widen that channel and head down to 37,000, but in the meantime a break of 38,000 could give us a best case scenario move towards 40,000 by the end of next month, which is the top of that channel. But at the moment that could change. For instance, the channel may be a bit narrower than I've drawn, and therefore the upside a bit less than I am suggesting at the moment. Below 37,000 risks down to the December resistance 36,300, and also the 50-day line just below that zone. Moving on to Bitcoin, which had a big week with the ETF news and everything else. The rug pull just below 50,000, which is not surprising. We'd already factored in various levels in terms of the downside, i.e. heading to the floor of that channel from October, 43,000, the 50-day moving average at 42,000. There's also support from December at 40,000, which is probably now going to come into play. Worst case is that we head back to 38,000, 40,000, which is was the old November resistance. What is noticeable here is that we've also broken the uptrend line in the RSI window from back in August around the 45 level, and therefore possibility of a break below 40,000 is possible on the basis, I suppose, that it was better to travel than arrive from the anticipation of the ETF thumbs up. Moving on to gold, which is also, or was a bit disappointing during the week, but it looks as though the 50-day moving average hopefully will stem losses. The losses or the support during the week just below that particular blue line there. 2022 is the current level of the 50-day line. Above that, we're looking for 2100 by the end of this month. 50 and 200-day lines both rising well at the moment. Moving on to the stocks, and the cupboard relatively bare, but it's good to enjoy the first one here, Cellular Goods, which is changing its name to Cell AI or something like that, going to beauty. Here we've got the stock just basically trading either side of that initial target we had here at 0.6 pence. That was the target when we broke the resistance line there from the summer of last year, 0.36. Bear trap gap reversal set up, and that worked well. 50-day moving average now rising, so we're looking for at least a retest of the intra-week resistance around 0.75. Above 0.75 on an end-of-day close basis, we could get a best case scenario target as high as a penny, which is the July resistance line projection there. But shares already done well. The only stumbling block, I suppose, in the near term is the 200-day line at 0.64. On to a stock which I haven't looked at for a few weeks, Cizzle, and here it looks like it might be third or fourth or fifth time lucky in terms of breaking through the pesky resistance for the shares around 2.75 pence. Initial target here at 3 pence by the end of this month, while we hold above the 200-day line around 2.3 pence. Next one is Corcel, which has done us proud over the recent past, and here we're seeing hopefully what is a mid-move consolidation between around 0.85 and a penny. Above a penny we're looking for up to 1.3, which could be hit by the end of next month. But the key here, I suppose, is holding the recent support area around 0.85. A stock which I don't normally look at because it's not that liquid is e-Therapeutics, but there has been a bear trap gap reversal here, even though it's very liquid. And we've also got a rising 50-day line. We also had a gap higher on Friday after the gap down during the week. So looking as though 16 pence should be achievable by the end of this month, while we're above recent support around 11 pence, and maybe much more given that W-shaped turnaround we've got and the bear trap gap reversal. Moving on to the stock, one of the stocks of the week, one of the few stocks of the week, Emerson, where we ended on a decent note. Initial target here was around 2.6 pence, maybe stretching to 2.8 pence, which is the 200-day line. Above that, we're probably looking for the top of the July gap down at 3.6 pence. And if we're lucky, that could happen by the end of this month. On the downside, I want to see the shares on the wrong side of 2 pence now, which was the December resistance for the shares. Stock which has been rather troublesome in the recent past has been Great Western Mining, but with the 50-day moving average rising now around 0.04.5, the initial target here could be up to the 200-day moving average at 0.07 by the end of this month, and that would be a modest initial target. After that, a bit like Emmerson, we've got a gap from July to shoot for 0.08 is the level there, but the key here is holding above that 50-day line. Global Petroleum is a stock I looked at during the week, and here it looks as though we're getting some traction at the lower levels. You can see that the shares bouncing on the right side of the 50-day moving average at 0.07 in the latter part of the week, rising trend channel base, and above 0.07 we're looking for the top of that channel, 0.16, as soon as the end of next month, or maybe even sooner than that. Katoro has been a steady pair of hands over the last week, and it looks like it's going to do more work. On the upside here, we've got, we had our initial target here, 0.13, the top of that April rising trend channel base above that. Looking for the upper parallel of that channel as high as 0.22 by the end of next month. On to Kanabo, which so seems to be getting some positive effect maybe from the cellular goods situation here. We've got a V-shaped bull flag resting on the 200-day moving average at 2 pence. Above that, looking for 4 pence as soon as the end of next month, given the sharp turnaround we saw back at the end of December. On to the last two. The first one is ProCook, and here we've got a broadening triangle which has been hit at the top of the triangle, 28 pence, above 28 pence, looking for the upper parallel of that triangle as high as 37 pence by the end of next month. If we're lucky, by the end of this month, backed by the bear trap gap reversal that we saw for the shares back in November. The key here is really holding above that mid-20s zone. Finishing off with Rainbow Rare Earths, and here we've got potentially a rising trend channel rebound, exciting in the sense that we've managed to break back above the 200-day line, which is rising, which tends to be a buy signal in its own right. We had a hammer candle on Thursday, an unfilled gap to the upside, so it is a bear trap gap reversal, and a break of 14.5 pence could take the shares up to as high as 21 or 22 pence by the end of next month, which would be rather satisfying given the consolidation we've seen over recent months. Only back below 10 pence, really killing the idea of a push towards 20. That's it for me today. More updates tomorrow.